How to get a $100,000 business loan with an SBA 7A loan so you can continue to build, grow, expand, and even get out of a tight pinch. Hi, everybody. Welcome in. This is a live. So if you're watching me right now, please give me a hashtag live in the comments or a hashtag replay if you're watching during that time interval. And I am not going to waste any more time getting into this. So I'm also going to be showing you how to get up to 5 million with faster financing, with longer terms, and even better rates. What could happen in your specific situation? Everybody comes in with different fundability details, different financials, bank statements. So I'm going to be covering that as we move through the material here today. I'm grateful that you could join me at any time interval. And if you have any questions, comments, or concerns at any point, please list them for me in the comment section. I'll try to answer them as I go. And if I don't see it, I'll get back to you sometime or towards the end of this material. Now, as you all may know, the EIDL loans are not there for everyone. People still in the queue getting processed. Funds are completely being exhausted. The uncertainty of the future with EIDL, we're not sure what will happen in about 2 to 3 months in the next given year. If we're even going to be given another year to be on Earth. If we're going to be even here for another day. So why do I say that? Because you should value your energy and your time. And instead of being hung up on, well, the EIDL loan didn't process me, I am not sure if I'm going to be getting financing, or I'm just spending all this energy and time flipping back and forth for this reason and that one that I didn't get approved for, because I hear it every day. People with their 4506T forms, the right types of tax returns, the right documentation, it wasn't supplied, or it wasn't supplied at the right time. They didn't collect it from me. They didn't get me in through reconsideration. I didn't even get the first amount. I didn't get an increase. You wouldn't believe how many times I hear all of this, but I always ask the question at the end of it: what are you doing to prepare post-EIDL? And this is where I'm going to get into the SBA 7A loan, and I'm going to go over what all the details are and how you can get financing up to 100,000 or 100,000 up to 100,000. Yes, depends on the lender and the program, as well as up to 350,000 and up to 5 million with that program. So let me flip back onto the screen here and let's move forward. But for everything you guys need, it will be listed down below in the description, as well as my funding questionnaire form. So if you want to know what your best funding option and options are very thoroughly from top to bottom, that meaning your introduction, qualifications, the services to those, how it works, the bonus tips, bonus material, and as well as a conclusion on your best funding recommendation, make sure to fill that out. It should take you less than 30 seconds, and it'll be the best decision you've made of your life in terms of financing, and it could be of anything else as well. So let's get right into this. If you can't see it too well, I'm going to be flipping back and forth through tabs, some of which you may not be able to see, but I have extra documentation that I want to go through. But you just have to understand, what are the qualifications to get funding with this program? That's probably what you're asking yourself first and foremost. So I'm going to cover that right now before we go even in depth with the options that you're seeing on screen right now. So I have another tab open with my documents that I put together for you for the purpose of this video. So we'll give it a second. I'm flipping over to that document right now. And in the meantime, I have my notepad here because I wanted to put some extra notes right in this. And so I'm going to go off of that. And in the meantime, I'm going to move this screen so you can see me there. Door open. Usually it's closed in the back, but I wanted some air to come through. I don't have the window open, and had to do a few things that I forgot to close that. So we'll leave it as is. And here we go. For qualifying for an SBA loan. First, before I show you those qualifications, if you're wondering, well, is this kind of like an EIDL loan? Can I get similar interests and rates? And what about the terms? Can I use the funding for similar purposes? And that is both a yes and a no. So first and foremost, the EIDL is not the SBA 7A loan. The EIDL, for more pandemic, you've been hit during a specific time, quarter, season, however you look at it during that year, in an economically hit area, etc., and you show proof that you do need these funds to recover, as opposed to an SBA 7A loan where, yeah, it can be looked at for working capital, debt consolidation, and some of these other scenarios for growth and expansion, business expenses. but they're also looking at profitability in your business. They're also trying to see, do you have substantial use for this funding? You're just not taking this and you're going to go gamble, or you're going to go use it inappropriately, and you're just trying to repay all the debt you have. Because one thing they look at, actually, let me go to the two here primarily. It's a cash flow, collateral, and credit-based program, unlike some other ones, where this one, they'll look at you at least having, you can get in between 650, but realistically, not even 660, it can, but 680 above. 700 plus is best, and that's usually in today's market is what they want. At least a 700 plus FICO credit score, Experian and the consumer credit bureaus. You have multiple ones, and credit is heavily scrutinized. So if you have too much debt you're taking on, hundreds upon thousands, even underneath that, maybe you're making your payments on time monthly, you have these net 30 accounts, and you're building all of this up, and you're wondering, will I be approved? And it isn't 100% certain without it going through underwriting, but I know from experience in helping people get the SBA 7A loan, and those who didn't get it, didn't get qualified, it's because of excessive business debt. How many inquiries do you have in the last 7 to 12 months, 12 plus months, the last 6 months? What is your debt to income ratio? You should have that prepared. What is your credit utilization rate now, and what would it be in the future? Because when we're looking at your debt, we're seeing, okay, how much have you accumulated? Yes, you're making the payments. Excuse me. It's another thing to pay them on time, but in a general speaking sense, well, that's 100,000 in this quarter. What would it look like in the next quarter? You doubled it by 200,000. You paid off 100,000. Now you're at 250,000 there, but you accumulated another 200K at 250,000 in the next quarter. That's not looking good. And because you're taking on too much debt that you're just trying to pay off through an SBA 7A loan, that wouldn't be your primary use. And just because the interest rates and the terms look more attractive, that does not necessarily mean it is the best solution. Hi, Kenneth. Can you use this loan for starting your business, like from complete scratch? You don't have existing business experience. And another one, it would be quite difficult to fund a complete startup. Of course, you'd have to come into it with a business plan and all of that, but we're looking at funding more so existing businesses. For all startup funding, grant solutions, I'll try to leave that down below in the description. I don't think I put the video together where it has the description, but in time it'll all be in there, so you guys can go ahead and fill that out. So let me come back to this document, and we'll jump back into the other one in a bit. So qualifying for an SBA 7A loan, it's not easy. As I said, credit, huge. They will look extensively into your credit reports. This is a hard credit pull program. And they will also look at profitability in your business. They want to see at least 10%, if not 15 to 20% in profit. And I have let me move this over. Yeah, okay. So I have my document here that I put together, and some of the things that they're looking at to get you the funding for it. Let me see if I can go to it right now. I have a lot of notes. And some of this I've done from a previous video that I went through. So I just want to make sure I have it where it needs to be. So the SBA funding here, and this is part of the formula that I was trying to get to. There's a lot of SBA stuff here that I put. So they take the profits plus your debt coverage service debt, or your ratio. So they take your profits times the debt coverage service that you have, and that's how much they would estimate you would get for funding. So you can also look at it this way. If I'm speaking in annual gross sales, and this is especially reflected upon other services that I'm going to cover from top to bottom, is they look at about getting you 10 to 15%, if not up to 20% of your annual gross sales, more so in the 10% to 15% range. And that's what they look at is more of an average, 10 to 12% more on average. But that doesn't mean it's necessarily going to be your scenario if you come in with better fundability details. So now let me come back into this document, and then we'll keep moving forward, and I'll answer any questions that you guys may have in a moment. So they come with a number of benefits, as you may already know. Lower interest rates. You can look at something like prime rated being around 4%. Bank rates, you're looking at about 4% nowadays, and up to about 9% or so. Some cases it could be a little bit higher if assessing your risk. So somewhere between 4 to 9%, 5 to 9% and so forth is a common range. I know it's not 3.75% like the EIDL, but you got to take the good with the bad. It's not necessarily bad depending on your situation, depending on a short-term profitability or the long-term of it. What do you need the funds for? Are you using it for one primary purpose and it isn't going to do you any well? SBA 7A loans, as well as any other ones, are good to cover cash flow deficiency, to cover up the fact that you're now hurting because you took this other form of financing that you really didn't understand at the time how to use that to your best ability. Because I hear it every day. People will say, well, I took an advance of 100,000 and I had to pay back 1.38 in a factor, or a total payback paying 138,000 plus the broker fees and all that, and concluded lender fees, which comes out to be 146,000, 150,000, however much you look at it. Then over the 8 months, now you're paying a certain amount of funding in return. So you have to really understand when you take it, do you really have a need for it? And then two, you understand the profitability of taking that funding, or is it just going to keep your business stable, afloat, working capital, etc.? So you can use it for a variety of purposes. Lower interest rates, longer repayments. You're looking between 5 to 25 years, up to 5 million. But there's different type of SBA funding programs that I'm going to get into. And you can lower your payments by far a lot more than other sources. You can use SBA money to refinance your debt or tackle new growth opportunities. But that said, qualifying for the SBA loan isn't as easy as it may seem. Requirements are rigid, which I'll get into in what are the documentations. And they allow very little to really no flexibility. I'm going to say no flexibility, high doc, low flexibility, and no room for error, because they want to make sure, yeah, you have credit, you have the revenue. It's one thing to have deposits, and it's one thing to have actual revenue. It's one thing when we look at the tax returns, what it's telling us, and if there's enough profitability in your business. But profitability and credit is not enough. What if you have your debt, as I'm talking about here, your debt to coverage service ratio times the profitability of your business and when you can get funded up to? And if you have too much excessive debt, that automatically disqualifies you if you don't have the needed documentation, which I'll be going over in a moment. How do you build business credit? I'll get into this in a moment. I do want to stay on topic. So is it Micra? Hopefully I'm saying it correctly. I will get back to you. Don't worry. Just stick with me through this video. I just want to stay on topic. Now, if anybody has any questions on SBA at this moment, I will be taking them. If it's anything else, let's leave that towards the middle or towards the end. So over here, qualifying for an SBA loan based on the type, there's an SBA 7A, which I'm focused on here. There's also the 504 microloans, disaster loans, COVID-19, etc., that I've also made content for down below in the description. I'll leave it there in time. If you don't see it right now, you'll see COVID relief funding solutions. If it's available right now, it isn't. Microloan programs, other videos on the 7A and the 504. But 504 is primarily used for real estate. 7A non-used, but for some instances, you can use the funding that I've seen and I've gotten people to do for real estate, depending on what purchase that is, what property it is. Is it an extension to your existing business? If not, what are you trying to do to expand, etc.? There are a lot of purposes. So typically you have the microloans at 13,000, and you can't get usually over 50,000. So 13,000 is an average of what a lot of people get. And I won't talk about what that is, but I'll more specifically, I'll leave a video down below. So SBA 7A loans are the most flexible and popular financing option right now on the market. And you can take a look at what these have in terms of the qualifications. So they cap out at 5 million is what I'm saying here, and offer a wide range of business expenses. You can buy inventory, new equipment, refinance your existing debt, acquire other businesses, and purchase real estate, as I slightly mentioned earlier. So they're available, if you didn't know, through a variety of banks, credit unions, and preferred lenders, even these fintech marketplaces, which I'll be showing you in a moment, how to get it with just 120,000 in annual gross sales, with at least a 660, if not a 680 and above FICO credit score, and at least 2+ years of business experience. And so stick with me. I'll be showing you that. It's a hybrid SBA loan, which is combined. If we can't get you, or in the meantime, while you're getting an SBA loan approved for, then we're going to also evaluate you for a line of credit, an unsecured one, a term loan. On top of that, MCA, cash advance, etc. If you qualify for those, and those are the ones we can give you. But I'll always communicate with you if the hybrid or any kind of the SBA 7A loan does not make sense. So you don't go into it having to go supply all this documentation, because it takes time. There may be 1 to 3 months plus, 6 months plus to get funding, depending on your profile. Sometimes 6 to 8 weeks. In 45 days, you can get funding, or you can get short-term financing before and then see if you get approved for the SBA 7A. So I'm going to be showing you that in a moment, so please stick with me. So there are several types. You have the standard SBA 7A, the 7A small loan, the SBA Express, Export Express, Export Working Capital, International Trade, Preferred Lenders, Veterans Advantage, and then the very common one here, the cap lines that a lot of business, especially with banks, if you're trying to get a line of credit, they'll look and advise for the SBA 7A loan, and that's how they get connected through a bank. And then the SBA, the government-backed loans, they guarantee it. So whatever happens, and then the case of a default, they'll get their funding back, or they'll get what they need in return. So each SBA 7A loan type features slight variations when it comes to the structure, your terms, and qualifications. In some cases, there's no room to negotiate, or there is a little bit of room and other terms with your preferred lender. And I'll have all this information down below. Again, that questionnaire form, if you guys need help, that'll be there, and I'll get to it back in time. I know I still have some to fill out, and I know some of you guys have been emailing me. Believe me, I see it. It's just I can't get to it right that second because I have projects and I have things I have to work on. And as things have been growing, it's like I'm very grateful for you and each and every one of you guys in here. I really am. I almost got like a goosebump for that because I do care about you as a person. If you guys go to a lot of other sources and you guys try to figure this stuff out on your own, it's very top of level. I'm showing you a lot of behind the scenes stuff as well as we move on with this. But I do truly care about you, and I really go above and beyond and stretch out. So some of you guys have probably conversed with me via email, text, direct messenger, and maybe a phone call. And please, what I say is please just don't. It's one thing you're seeking information, but also understand that I'm here to help you. And leaving it at just information is great, but I'm also going to ask some questions and say, hey, would you need funding in the immediate future? Are you going to be needing it in long term? When are you actually looking for funding, etc.? And I won't pressure you or anything like that. What I'm saying is I take time and I'm very punctual. So don't just seek something and then we're going to follow up and you just go ghost. You completely go somewhere else. And you're seeking information. And then what happens a lot is people go their own ways and they end up getting something terrible. I spoke with individuals today who said they wouldn't have wished they took what they took. Now that they know, because they converse with me and they understand because I've given out this material, they would have never have done that. People who have gone into bankruptcy, people who have excessive amount of debt, who really don't understand, people who promise you something and don't deliver on it. I won't do that. I'll promise on it and I will deliver on it. And I will give you the best solution available. So let me come back to this document and we'll go back to the one you see on screen at the moment. So how do you qualify for an SBA loan? Here are the basics. It doesn't matter if you're looking for whichever standard. It just depends. So if you're looking at every single SBA 7A loan, like I just mentioned, the international trade, the cap lines, it's pretty standard. So you have to meet SBA size standards for what contributes to a small business. This is based on the number of your employees and your total annual income or your annual receipts. You can read more about this and I'll leave more information. I'll try to down below in the description. So you have for-profit business, must be located and operate within the United States, have invested equity because collateral, of course, for a certain extent of funding that exceeds it, you will possibly need to supply that with sufficient high enough real estate, commercial property, any kind of residential investments properties. And you have inventory, equipment, accounts receivables, unpaid invoices, etc. So have invested equity, very important, especially if it's in the starting phases. You might not have enough of it in the whole appraisal process. So demonstrate need for financing, zero outstanding debt to the U.S. government. I'm going to say that one more time. Zero outstanding debt to the U.S. government. That right there would have already canceled out a lot of people from this financing options. Owners are not on parole. Credit score qualifications for an SBA 7A loan. I said earlier, 650, 660, but primarily speaking, a 680, if not 700 and above, is primarily what they want to see. And if it isn't 700 and above, then you better come into it with better revenue, better little minimized debt, debt to income ratio, low credit utilization ratio, minimal inquiries. And if you don't have credit worthiness, that would stop you. Business credit establishment is what you'll need. And if it's not like you have high enough of a business credit score on your paydex scale, etc., then we're going to deeply look into your credit with FICO and see what are the consumer credit reports telling us if you can handle these payments, if you can handle taking on more debt than you already currently may have. Anything lower, and you may not be able to qualify for SBA financing. And even if the interest rates you receive will be more pricier in terms less favorable. Having a higher credit score will almost always give you greater negotiating power when it comes to sitting down with your lender, which is why you will want to get your hands on your credit report before you apply for financing. And I may ask for this. I usually do with your credit report, and I'll send you links to where you can do this for free, where it will show up as an inquiry and so forth, where you can get it from. So you can access your business credit score through bureaus like Experian, Equifax, and Dun & Bradstreet. If your credit score is low and you have doubts about your eligibility, take the time to improve your credit before applying for SBA financing. So I'm going to get into, let me make sure I didn't miss this, qualifying, and I want to look through bits of information here. So yeah, let me go back here and I'll get back onto the document on the screen here. I'm flipping through documents. So let me go through some of the 4 most or 5 most common challenges that people go through when getting an SBA loan here that it's put together. I just want you guys to be well aware of this before I go into the options and what those documents include. It's very important for you to understand this as your education for like, hey, if I don't qualify for an SBA 7A loan, what is my other option? And I'll be getting into that at the end of this video. So please stick with me. Now, one second. Okay. So here are some loan challenges that you'll go through with the SBA. At the very top, it's the amount of documentation, bar none. And this can be a disqualification, but it can also qualify you. But do you really want to go through a scrutinizing credit report checks, profitability, tax returns, accounts receivable, AR reports, submitting all this extra stuff, 2 to 3 years of personal business tax returns, only to find out that you just had a hard credit inquiry and that you didn't even qualify? But because you just wanted it, and it would make sense, and a lot of people it does, and a lot of those that don't. So there are other places to go to. So complex process, you have endless paperwork. The vast amount of paperwork and red tape banks and other SBA lenders dump on their clients to figure out for themselves isn't only irresponsible and dangerous, time-consuming, and straight up unethical. So no one who isn't in the SBA industry should be left alone to figure how this all works and how it's all correlated and what all documentation is needed to be put together. So it could be a little bit more difficult for you to get financing. So that is a huge component of it, credit, profitability. And I talked about the formula and how they determine, how much you can get financing up to. So if you have, what I ask people is, they want an SBA 7A loan. They don't want an unsecured term loan. They don't want a line of credit. Maybe they do know that or they don't. So I have to understand where you're coming from and why that's the case. And why is it that you're looking for an SBA 7A loan? Just because you didn't get an EIDL loan, you want an SBA 7A loan. You may qualify for it, but it doesn't make sense to go in that direction. It could be because of your disqualifications, or it could be you're qualified. Why would you want to go through that when you could have done this in this format? Perhaps it would have been a little bit more of a higher interest. Perhaps you have a different type of financing, asset financing, and perhaps you have more control to give up. So another denial, bad credit. And what I mean by that is it could be on the credit reports. It doesn't just mean the credit score in general. So the lenders and the banks, et cetera, they follow ridiculous and arbitrary standards set by people who don't understand and have little to no connection to needs of Main Street businesses. Tax liens and missed payments. Even if you have exceptional credit and you're making rockstar level sales, something as small as a tax lien or past missed payment can trip you up. And even the biggest people out there with the biggest businesses don't even get through this because of that reason. So long wait times for funding is another one that you have to consider. Now let me switch on over here to this document. I don't think you can see that yet on screen, but this one is just going over the different types of SBA loans and what would be required. The forms, SBA in the form 1919 and in the form of 1920 are required for some of these loans here. And what is required for a certain amount of funding you're looking for, and when what's being asked for in terms of business fixed assets. So now let me jump onto the screen here. And we're going to go through these options of how to get 100,000 and above, even less, through an SBA 7A loan. So not exactly 100,000, and I'm going to go through some of these other ones too. So we have one SBA 7A loan option. Perhaps you've seen a similar format to this, so this will look familiar. But this option perhaps will work, and it depends. I'll give you a customized response, and if you qualify for this or if you don't, just by simply filling out a questionnaire that I'm going to leave you to down below in the description. So make sure you fill that out. It is well worth your time. So I'll give you an answer depending on your fundability details. I'll ask you a bit of other details, like how much debt have you taken on, if anything? Do you have any tax liens? What kind of equity, collateral can you state? How much, etc. But one example that I left here, and this is like a trucking, because this is one that I did for a trucking client, and I've kind of moved things around so it's not per se theirs, so it's been moved around a bit. So in this example, if it were a trucking business, your business has to be very stable. First and foremost, what does that entail? What are some subcategories? That meaning, do you have enough fleet? Do you have enough on the ground when we're speaking about trucks? Operational, what is non-operational? How many employees do you have operating these vehicles on a daily basis? What is happening continuously over a month, over 2 to 3 months, over the course of a year? And what have you done, if anything, in your future projections? What is going to happen? We also want to see what your current revenues are, yearly, etc. What is the profitability of all that? So it is very big when we talk about understanding your business. Non-excessive debt and strong credit history. Credit is what gets people, and specifically industry speaking, like for this example, trucking, it's very high risk. So it wouldn't be my first go-to option, even if you're looking for an allotted amount. And think about it this way. Let me move this off screen. Generally, you get up to 300. Lenders will go up to 350,000 for working capital, sometimes a little bit more than that. But you have to understand that if you're using this for growth, expansion, working capital related payroll, that's up to 134,000 is usually what you'll see in this space. And between 2 to 5, if not 7 years, sometimes up to 10 years. And if you can't get that and you were expecting more time, that's just not the case, because up to 10 years, about 10 years, you're looking at about equipment financing. And if anything over, it is more real estate focused. Now back to the screen. So if you're looking for an up to 10 year with no prepayment penalty and would like a loan amount ranging from, let's say, 30,000 to 350,000, then there's an SBA loan option with like somebody like SmartBiz. That would be a possibility to go through. And you would also need to make sure you have a liquid credit of 155 or greater for that category of range of funding. So it's one thing to have business credit established, and another to meet the liquid credit part of the FICO SBSS score. Now, if you don't have that, it's not the end of the world. You have to show over 10% in profits and have strong credit. But for this specific service, you would need at least 155 FICO SBSS score. That's liquid business credit. That's why it's not enough to just have credit business established. And if you're looking at getting over 350,000, that FICO SBSS score isn't generally looked at. You just have to have strong enough credit. And if it's not there, it's not going to work. So for this one, here's an overview, and there's different programs, different lenders, brokerages you can go through. And I'll have more information of these down below, so make sure to check them out. So loan size, 30,000 to 350,000. Use of your proceeds, working capital, debt refinance, new equipment purchase. So you'll want to demonstrate a strong purpose as well for growth and expansion of your business, and use for working capital, as well as the possibility, possibly paying off any debt to give you a good shot of getting approved for. So time to funding with this, pre-qualify in 5 minutes, funding as fast as 7 days after the application is complete. So this is a faster, non-traditional, you can call it, banking solution. And they also offer online banking term loans. So if that's something you qualify for, then we can look at it even more. So interest rates, 30K to 49K prime rate plus 3.75%, 50K to 350K prime rate plus 2.75%. And the loan term here is 10-year term with no prepayment penalty. Payment Monthly payments are debited from your checking account. Fees, 4% referral and packaging fee, approximately a $450 in banking costs. Loans from $350K to $150K require at least 1.75% guarantee fees. Loans and above $150K require 2.25% in that fee for the SBA guaranteed. Security, blanket lien on business assets, geographic coverage, nationwide. And there's some down payment collateral required. Most of the SBA 7As would require you to put down at least 10%, and they can go as high as 15 to 20% or so. So you get a maximum SBA guarantee percentage of 85% for loans up to $150,000 and 75% for loans over $150K. So as far as the collateral goes, the minimum the lender must take a first lien on assets financed with loan proceeds, and the lender must take a lien on all the applicant's fixed assets, including your real estate. The lender is not required to take a lien against the applicants as yourself, real estate, when the equity is less than 25% of the fair market value. So I've seen that in a lot of cases. The lender may limit the lien taken against the real estate to your loan amount given. So the down payment aren't always required, but like I said, 10 can range from 10 to 20 or even up to 30%. Qualifications and borrower eligibility. So personal credit score for this one per se, 650. But like I said, credit, if you have higher than that in the 700s, primarily the better chances you have and the easier it would be for us to communicate with you, and there are no discrepancies. Clean reports, clean everything if you can before going to apply for this. Clean up any debt, inquiries, existing business loans you may have. Like I've spoken to some recent individuals who have taken on cash advances, term loan options of a year to 2 years, unsecured, secured by collateral. Maybe you have accounts receivable financing, and it's not exactly all going to be correlated. But the fact that you, one, have demonstrated that you have applied for other funding, but also received it. It's one thing to apply and be denied for, but it's another thing that you've been applying for and you've received it, not just looked at an offer, but took it, you have existing, and another one. The more you've taken on and the more you've paid it off, especially if you've paid it sooner rather than later, and you've covered all that, and then you go and apply for these, the much easier it'll be. Of course, you have to have fundability details to match up everything. So now let me get back on the screen here. So business credit score, liquid credit, 155 or greater. Usually you see that in the ranges of 30,000 to 350,000 for funding. And like I said earlier, working capital, a lot of the times 350,000 is what is given, up to 350,000. Yes, you can go up to 500,000. I've seen some cases up to 750,000. But if you're expecting some truce number of $1 million plus, it could be a bit difficult because unless you're looking at equipment, real estate, and so forth, it'd be difficult to go for. So my question to you is, do you need it all at once? If not, there may be another solution available. You may get 350,000 to find out I needed another 350,000 I don't get approved for, or I have to go through this process of getting approved for it again, and it takes a little bit longer. So the SBA 7A isn't always the most attractive solution. So public records, no bankruptcies. Let me move this over here. Or foreclosures in the past 3 years, no outstanding collections at all. Like not ending up in collections because you have these other payments. And it just shows, what is the word I'm looking for? Affordability, that's the one. Like when you're looking at funding, not only with SBA, but any other type, affordability is always the question. A lot of people get themselves in situations where they can't make the payments back. And so they go on, I lost the word right there. They defer, not defer. They go into default. And a lot of people expect them to get a deferment, but that just doesn't happen. Well, sure, with the EIDL loan and that, but you have to show significant proof that you can make the payments back. It all comes down to repayment. Less of an interest, less of the terms, more about the repayment is what you need to be thinking of. Now, this is a huge one. No open tax liens, no recent 30-plus day late payments. So if you're paying on time, great, but it's another thing again. Excessive business debt. How fast do you pay that off? I'd say pay it off. If you can pay off a lump sum, pay it off. Cash flow. Sufficient business and personal cash flow to service all debt payments demonstrated by 2 years or from 2 to 3 of tax returns, credit reports, and interim financial data. SBA specific criteria, no felonies, no delinquencies, and or defaults on government-related loans. Very crucial. The basic eligibility for this program, 2+ years in business. Business owner or owners, there's multiple ones in a company, remember that, must be U.S. citizens or lawful permanent residents. Business must be located in the U.S., as mentioned. Business must be open to all non-discriminatory basis. Nonprofit businesses are ineligible. Your business must be able to demonstrate repayment from ability from the earnings. Your business must not be involved in lending, investing in real estate, religion, politics, gambling, or sex-related industries. Unfortunately, I know I've spoken to a lot of people in these types of industries and what they've been involved with, even in stocks. Like I spoke to just some people recently, and they understood before I even said what I was going to, like how you're taking what you're getting, how you're investing money, how you're making money, how you're keeping personal away from business, or the two together, and to be careful that you're doing it. Because when we look at the transactions, especially in bank statements and all that, we want to understand what is actually being deposited and what is the actual revenue. So it could be two different things. And having issues with all of that, it just doesn't go well. Use of proceeds, working capital, you have payroll, inventory, marketing, finance, receivables, bookkeeping, and legal fees, hiring. Like hiring more employees, right? You want to add more so that can help you in the short term, or it could be short and long term, or just long term. We're even financing any existing debt, new equipment purchase, no construction, no acquisitions, as in like business acquisition. So there may be a different way you can go without going through smart business, and that may change over time. And you can also get a commercial real estate loan, CRE, usually more for 504 type related. And there's a little bit of details right there. But this isn't a 504 video. There will be separate ones down below. Now, there's a hybrid SBA 7A loan that I want to get into, and this is going to be a very huge one. Not only going to get 100,000, but at a minimum, but to get up to 200,000, 300,000 and above. So this option could work. And again, it depends on each different person. But like I said, each of these options, it's standard across the board. Credit. It's not enough to say I have a 740 on my 3 consumer credit reports. One is 780, another one is 800. Great. But if you've spoken to me or if you've seen my emails, I will talk about what is extensively also being looked at. And debt to income, credit utilization, having inquiries, if so, how many, if not, other things that show up on your credit report, and things that you need to get fixed before you go in and apply for an SBA 7A loan. And there's stuff that I'll leave for you down below to understand more of it. So the hybrid is 2 separate loans. One is an unsecured financing product. It's a term loan, a line of credit, or the cash advance, which can be funded and easily and quickly. The other loan is a 10-year SBA term loan, which we can get a letter of intent within a couple of days, but takes 6 to 8 weeks for you to actually receive the funds with this hybrid SBA loan option. So again, what it does is, and why it's so awesome is, if you qualify, first and foremost, we have to see if you're even eligible to qualify. And that's why you submit that questionnaire. Sometimes you say, well, I'm doing 50,000 per month on average. I'm doing 65,000, lowest 50,000. I have 3 or 8 years in business. I have a 780 FICO. I'm in this industry, and I have all this, and it looks good from the outside looking in. But when I speak to a lot of individuals, then that's where they fall. A lot of them don't have the documentation I'll get into. They don't have the type of debts that we're looking for, the coverage, the profitability could be another factor, because those are the 2, credit and profitability. And just saying, hey, this is what you're going to have to go through. And if you don't qualify for it, you might already had an inquiry, you might have had been dinged down on. It doesn't show on your personal, rather your business credit. And this is what you did to go through it, and it didn't end up happening and working for you. So a lot of people go through that without realizing how it actually works. Back to this. So these SBA loans can go up to $5 million, as you see with all SBA 7As. A business has to be generating at least $120,000 per year in gross revenue, and have at least a 660, if not what we're looking at, 680 plus FICO credit score. If not better, 700. As I said earlier, 700 and above. We will need to see the three most recent business tax returns, and 3 most recent years and years-to-date financial statements. So the SBA goes primarily off of credit score and profitability of your business, as I said some numbers earlier. So the documents that would be needed for this hybrid SBA 7A loan, as well as in a few other programs primarily, we're looking at this year, since we're in 2022, we need your 2021 business bank statements, 2020 and 2021 profit and loss balance sheet, year-to-date profit and loss and balance sheet, at least through Q1. Previous 3 years of business and personal tax returns, very standard. AG and AR, AP reports, business debt schedule, application, and that's what I can get you, and you can get started with that. So very common. If we're in 2023 or 2023, then we need 2022. So you can see how it corresponds to all of that. So you can see already from a face value what kind of documentation you would need to supply. And it's not enough just to supply that, because now you have to go through the starting and then through the middle and through the end of the underwriting process. And we do a lot of things in-house, so we can have an evaluation with credit reports and little bits of information to see, hey, would you even be qualified for an SBA 7A loan? If not, we can explore another option and go the other route. But you have to keep your mind open to those and understand those financing options. So that's what I'll go to in the end here. And I appreciate your guys' time. I'll answer these questions. We'll try to round up here very quickly. So alternative SBA loan program, there's another one here. Excuse me. So with SmartBiz and somebody like National Business Capital through the hybrid SBA loan, which is what I recommend, that I'll leave those two down below in the description. And you have to understand who you're going through. So if you're looking for terms between 5 to 25 years, usually up to 7 years for working capital relief, and in some cases 10 years, as I mentioned earlier. Sometimes with business term loans, all you need is between 2 to 5 years or 1 to 2 years. If you don't get 1 to 2 years, what are those options? So please stay tuned. So $250,000 to $5 million is the approval amount for this specific program and these lenders. 5 to 25 year terms, 680 minimum FICO standard, 2 years time in business. Plus, if you just have 2 years and you don't have 3 years to supply 3 years of tax returns, then we'll look at least 2 years and we'll look at it from there. But sometimes 3 years is the requirement, and if you don't qualify for that, it's pretty difficult to. So what I say is have more time in business. Don't just meet the minimum of 2 years. I have 680 FICO. I'm doing 500,000 per month, or I'm doing 120,000 in annual gross sales, or 100,000 for the hybrid SBA loan to be considered. But come to find out, it doesn't go through because you don't have enough time in business, and again, all these other factors that I look through as well. So cost of capital, which is the interest rates, 5 to 9%, which is a lot of cases what you see with these prime rates plus an additional. So time to approve is equal to 3 to 5 days. You can get funded between 1 to 3 months. The hybrid SBA loan, about 45 days, and then we can go from there. And we can look at short-term financing before we get you approved for the longer term, if you do get approved. Important details, it just requires strong credit history. As I've said time and time again, requires profit on taxes, at least 10%, if not 15 to 20%, excuse me. No excessive business debt whatsoever. No recent bankruptcies, tax liens, or foreclosures. Collateral may be required if the loans are above $25,000. Certain industries are eligible. Documents required for this specific one, an SBA loan application. This is stuff that I can send you. 12 months of bank statements, 2 years of business taxes, 2 years of personal taxes, year-to-date financials, profit and loss, balance sheet, copy of your recent credit reports. Yeah. And so the minimum here, you want to be doing at least $500,000 to be approved for that in annual revenue to get this $250,000 to $5 million to be approved for. So you may not get through that service. So now I'm going to jump into some of the other services outside of the SBA 7A, and I'm going to get into the term loan options. So if you guys have any questions on this, please let me know. So I'm going to answer the question. Mikro, I'm not sure if you're still here. How do you build business credit? How would I know what to apply for if I don't have business credit? Two amazing, great questions. So how do you build it? I can give you a bird's eye view. I'm not going to get into like once you start getting these business credit cards, how you start reporting and how you start applying for these vendor programs to then report you to your trade lines. How do you build more accounts? That I can speak to. I have a business credit video series down below that I'll try to link you to. So make sure to check that out. If it's not there right now, I'll get into it. So you guys can check that out at any time. And how would I know what to apply for if I don't have business credit. So not every funding program is looking at specifically reporting to Dun & Bradstreet or any other business credit bureaus. They're not going to primarily always look at credit worthiness. You may just look at your FICO credit score, and it will be based off your personal credit. It may not be built on personal and business credit. So personal without business credit. Some personal and business credit worthiness. So usually, well, I'll get into right now what that service may be, but it could be you could qualify for a term loan, or it could be the more of a cash advance where you don't have business credit established, or you do, but it's not sufficient enough. So you build business credit first and foremost by making sure you have the foundations of your business together, your corporation, LLC, S Corp, C Corp, and the identity, your DBA name, your whole business name, domain, getting a website together, having Dun & Bradstreet, everything built together. And again, all this will show you down below in my free video series you guys can pick up. Now let me come back to this document. Oh, I'm already in there. Excuse me. So now you guys got an idea of how these SBA 7A loan options work. What are the qualifications? Like for the hybrid SBA loan, at least 2 years time in business, you should be depositing $25,000 on a monthly basis in your business bank account, or $300,000 in annual sales. So as I said earlier, let me move this over. There are some requirements to different programs. As I just let off on one of them, they're requiring you to have at least $500,000 in annual revenue required to get between $250,000 to $5 million. Those are more of those higher, more standard SBA loans. And let me come back here so you have an idea of where that range would fall into. So yeah, the standard SBA 7A loan, not the SBA 7A small loan. You don't have the SBA, or it could be the SBA Express loan on top of that. It could be the Export Express because it's between $250,000 to $5 million. Excuse me, Export Working Capital falls into that. But anything underneath that, primarily speaking, the SBA 7A small loan, then you may want to lead in a different direction. So now let me come back to this here. I know it's a little bit dark. I have a new HP laptop, and I'm still trying to figure out the lighting on it. So please bear with me. I do apologize for that. Now over here, we have the online bank term loan options. So if you qualified for traditional banking, and again, we're not looking at the SBA 7A at this moment. We just went through all of that. You have an understanding of what you need to do to qualify, what we would need in profitability, what we would need within credit. And it's more extensive than that, and all the documentation required. So I'm going to get into why, and you're going to start to see a better picture of, well, the SBA 7A could work, but now that I know that these options are available, it makes sense to do it this way. But because nobody else explained it to me, somebody else promised me, and they didn't deliver on it. So you have all the information here. If you qualify for traditional banking, then you could qualify with an online banking institution, which is similar to a physical location, just digital, and much faster and more flexibility. So here are some of the details. So the loan size can be between $30,000 to $200,000. So not in the sense is it a SBA 7A loan, but somewhat of a similar range. But I'm not going to start pushing the two together. So $30,000 to $200,000. The loan description for this would be a bank term loan. Again, if you don't qualify for a banking solution, I'll show you what other options are available. Or if you do, but you're looking for an alternative, then that's another indication. And I speak to a lot of businesses and business owners. Well, yeah, I speak to the businesses. I mean, the business owner. I'm not like actually going to a wall here, and I'm saying, hi, business. How much do you do in revenue per month? Get back to me when you have the answer. No, what I'm saying is I speak to business owners every single day, and I see the same thing across all boards, is just understanding what you bring to the table. Think about it as a feast. It's going to be your very last one. What are you bringing? Are you cooking something? Are you just feeding off of other people? Are you putting your value and you're bringing it and you're saying, hey, this is what I know I can deliver on. I know you guys will accept me for this. This is what I have. But it's not enough to just come in with the bare minimum and expect you to get funding, especially with the SBA 7A loans. And it's a very scrutinizing process. And even if it's attractive and it offers up these longer terms and lower interest, it's not the end all be all of what you need to do. So now let me get back into this. So interest rates, let me come back up here. So use of proceeds, working capital, debt refinance, new equipment purchasing, time to funding, pre-qualify in 5 minutes, fast, very fast. Funding as fast as 2 days after application is complete. So this is where it's an advantage over going through the SBA 7A. If you qualify for traditional, you can come through an online banking solution where you can get funding as fast as 2 days, as opposed to waiting 6 to 8 weeks, waiting 1 to 3+ months, etc. Interest rates, fixed rates from 6.99% to 26.99%. Keywords, fixed interest. So it may be higher than a bank rate. You go into your bank, you can qualify for that. But this is faster funding too, and it's more flexible. So that's what comes with higher risk, higher rates. Loan term, 2 to 5 year repayment term, so more than enough time. And it's just above the term loan, so it makes it a little bit of a longer term. So with no prepayment penalty, monthly payments are debited from your checking account. Fees, 6% referral and package fee, between $200 and $300 for bank closing costs. Security, lien on business assets. No minimum requirement for the value of your assets. Geographic coverage, this is nationwide. And qualifications and borrower eligibility. You have a personal credit score of a 650, public records, no bankruptcies or foreclosures in the past 3 years, no outstanding tax liens, cash flow, or to support your loan payments. Basic eligibility, 2 years plus in business. And you get to see a little bit there. U.S. citizen, similar to what we saw a little bit earlier in terms of the Smart Biz SBA 7A. This is more of a term loan option. So excluded industries. You see there, I'm going to quickly go through this for time. Nonprofit businesses are ineligible. Your business must be able to demonstrate repayment from the earnings. Use of proceeds, we saw there earlier, so it's somewhat similar. So you can't use this one for specifically acquiring a business. Now, let me get into another option, and this is going to possibly be more attractive to you. Let me just segment here, and I'll try to close up as fast as possible. This is going to be an option where you have more control over what you give up. Sure, the SBA 7A loan, equity, real estate, properties. However, with them, you're giving up more control than you may want. You may say, I don't need this. Take away as much as you can for the amount of funding that I can qualify for, and I'll take that. Or you may be here and you're thinking, I have sufficient collateral. I just don't want to give up too much. It's too much out of my control. Instead, what you can look at doing is getting accounts receivable financing. And these are unpaid invoices. We can look to see how much you have in annual revenue. We can see how many unpaid invoices you have over the duration of that, and then make an assessment up to about 95 up to 97% of what we can finance up to on those aging account receivables and even less than aging. And I'm going to get into that right now. So if you didn't know what accounts receivable financing is, you can use your unpaid invoices as collateral and give them to a lender in exchange for the capital that you need. This may involve invoice factoring, which is the purchase of receivables for cash flow, which I do a lot of. So after selling your invoice or bulk of receivables, the factoring company is then responsible for receiving the payment, taking this completely off your own platter or your own plate. So by selling the invoice or the invoices, again, you have control over how many you want to give up. You can get the capital you need to pursue new opportunities or manage your cash flow, which is huge. You're trying to bridge cash flow gaps or just trying to get back, because we all know if we take the type of funding we probably took in and we're like, well, now we're hurting cash flow wise. I didn't think I'd be in this position. I didn't think I'd have to do all this. That's why it's very important to understand where you're coming from. And the thing is, if you're like in the trucking industry or any other one, and you're paying off a broker for the loads, and they don't pay you back in about 30 months, in about a month, 60 days, 90 days, you're not getting paid back, 45 days. And now you're suffering with cash flow, and you have these gaps extensively week in and week out, where now that funding or that money that you could have had in place, you could have put it in the inventory, you could have put it into getting new tires, possibly towards the finance of a new truck or an old truck, or whatever industry you're in. It does not matter. It doesn't have to be specifically trucking. It can be any other one. Now, let me come back into this here. So by selling your invoices to the lender, you can get capital that you need to pursue your new opportunities or manage your cash flow and payroll right away. Because the invoice itself, it functions as a collateral. You don't have to put up assets or real estate to get this funding, equity, etc. So other asset-based funding solutions you may qualify for, not sufficient enough, or it is, but it's not attractive. And when you need to qualify, and even in those senses, they look at accounts receivables a lot of the time. So if you don't have that, but you do have other forms, you still might not qualify. So what you would need to qualify here 6+ months of business. A lot of times it's 1+ year. 40,000 in monthly receivables and or 100,000 in open receivables on 30 to 60-day terms. $1 million in annual sales. No minimum credit score because we're looking at it as a collateral-based product, and a few other things I'm not going to cover here. I have another video for you guys who are wondering about accounts receivable financing. I'll leave down below, as well as if you're in the trucking industry or any other type of financing in other industries, please check that out. That'll be there and well worth your time. The benefits: sell one or several invoices, get funded immediately, manage cash flow gaps, and you get a revolving line of credit. Facility size, 250,000, no cap. Lines of credit amount fluctuates as your AR fluctuates up and down. Rates, this is what you want to know. They start at a prime rate, what we're looking at today with Federal Reserve and everything happening, Wall Street, recessions and what we're going into, and inflation. So from 3.5 to about 4% today, plus 2%. So prime rate there, plus 2%. And in some cases, it can be from 2% to 6%, again, depending on the risk. So the rates can get into the high single digit / teen rates. Just know that, and it's not necessarily a downfall. 4 to 7 days application to funding, so much faster, as opposed to waiting for the SBA 7A loan, where you're not waiting 45 days, 1 to 3 months to get funded. More details: funding amount, 10,000 to 5 million. Flexible term, 6 months up to 10 years. So look at it this way. Remember what I said earlier. You can get, in some cases, even with I always want to say HBA. I don't know why. It's almost like I want to say HB because I was just in Huntington Beach. I was visiting California. But the hybrid SBA loan, it's a lot of like abbreviations, SBA already, and then SBA. So with that financing product, if you can get up to 10 years for working capital, great. Sometimes it's up to from 2 to 5 years, and sometimes up to 7 years. And you just have to show an extensive proof of that working capital and what it's actually going to do for your business, not just now, but in the future, in the way future as well, if we're giving you longer terms. But at the same time, think about your overall total cost of financing. How much are you paying towards the interest? Think about it like that. Yeah, you pay less maybe on a monthly basis, but over the course of 5-7 years, you're paying an additional 15 to 20,000 as opposed to having this other loan that you may have gotten approved for a term loan of 1 year or 2 years, and it's less. And so you're paying it off much faster, and it's helping you out in the long run. Now let me come back to the screen. We can potentially lend up to 95% on your aging receivables. Documents that would be needed for this: the completed application. There's a digital one. Usually you can upload bank statements. There's a PDF one, but online is best. That's what I recommend. And a lot of the times I can see what's being uploaded, and I can see what's happening in processes and what's happening from there on out. So a lot of it can be, again, uploaded directly there. It's safe and secure. Most recent business tax return, 2021, and year-to-date balance sheet and income statement, aging AR report. So right now, look, we're looking at your most recent business tax return. We're not even asking for 2 to 3 years of personal and business tax returns. We're looking at your most recent 6 months of recent bank statements. We're not asking for 12 months like in some cases we would, but we do need the 2021 year-to-date balance sheet and income statement. So have that prepared. Aging AR report. It's very crucial you have that. Now, let me move away from that and into the term loan options, and this is what possibly a lot of you guys would qualify for. So we have also merchant cash advances or hybrid cash advances, as they're well known as. And there are also these term loans that are in conjunction. At any point, rewind this, watch it back. Take time. I'm not a talker, but I have to go through this to get it done fast, but take time. Slow it down, make it go in slow motion if you need to. But I can also communicate this with you. Just look into the questionnaire form down below on what your best funding option and options are. And don't be a ghost. Don't be that person who, let me move this here. Let me try to brighten the screen up. I don't know if that did anything. I don't think it did. But don't be Casper the Friendly Ghost or Homer Simpson. Have you guys seen that meme? And you know what I'm talking about. Or your kids, they probably know, or they've shown you. But he's going back into the bushes. There's like 4 frames, and you see him popping out, and then the next frame he goes in like this, and then you can't really see him anymore. You probably see his nose sticking out. Don't be that person. Don't be an individual who is like, I got the information from Michael, and then it comes down to like weeks go by, and I don't understand what you're trying to do. Like, you said you thought you were going to get funding within the next couple of weeks. Good. I don't push you or anything. I just let you know, hey, I'm still here. if you need help getting funding, are you still interested in it? Very lightly. I'm not aggressive in any of this. Now, the ball is in your court. And if you're not punctual like I am, like you may be just a business owner, but I'm also a business owner and I'm an entrepreneur. And so I think like an entrepreneur, and that means I'm very punctual about how I use my energy and my time. So if you're not there with me and you're just here like, I don't know, and dabbling, and the feedback being given to me isn't like, there's no communication whatsoever. You just went ghost. I will not spend any more time. And you're going to be questioning like, well, I tried, and no, you did not, because I was being punctual. I was following up how I needed to. It's just you weren't doing your part, maybe how you said it, or you just said it to yourself, but you didn't follow through. And so just be very punctual. Like right now, even doing this, I had to find an hour's worth of time that I should have been devoting also to completing some questionnaire forms and having to speak to some of my clients. So please be very considerate. I very much value all of this. Energy and time is the number one thing, and I can't get time back as well as you can't. And if you're just trying to seek information, great. Maybe you don't want funding, you just want to know what's available, good. I don't mind. But don't be that person who just shows up and then disappears. I end up finding out they got funding somewhere else because maybe they didn't like what they got here. Or they didn't find an email that I sent them. You didn't do your due diligence. And at the same time, you thought you'd get something better. And what you got, you were like, yeah, I got it. But you didn't fully understand what you got yourself into. Oh, well, there's the SBA 7A bridge loan, but I didn't know there was the accounts receivable financing option. Oh, I could have given up that ass. I didn't have to give up any kind of asset. Oh, now that I knew, there was a line of credit, unsecured term loan, unsecured line of credit, or secured loan, or a secured line of credit. But because this guy gave you all the information, you just didn't act on it, or you just decided you go your own way, realistically, now you're in bigger trouble. And now you're coming back to me wishing, and I get people like that every day. I kid you not. And I'm not just saying it just to say it. I've had about 3 people today, one on a call and 2 more just via email. And then another one just sent me a text to follow up. Because they put themselves in a situation where they went through a program and they showed them options and they promised them this, only to find out they got themselves into a big hole. And they, like, if you come to me, I'll show you like why you got that option, why you took that funding, and why they were giving you that, and if it's realistic or not. So keep that in the back of your mind. Now back over here. So the merchant cash advance product, this is more of a shorter term. You see with somewhere between 3 to 11 months in the most parts, sometimes 4 to 11 months, depending on how and what lenders you go through. A merchant cash advance, and even a hybrid one, well, we'll just say in traditional sense, it's where you get advanced an amount, usually depending on how many deposits your business is making per month. The more the better. We're looking at about 3+ deposits consistently per monthly basis, and it's based upon cash flow, and this one is not specifically collateral based. So one thing I want to mention before I go forward, and I will jump back on tangent here. I won't get too far on a tangent. So like the SBA 7A loans and any other type of funding, you have to be consistently depositing. As I said earlier, $25,000 if at most $300,000 at a minimum in annual revenue, annual gross sales to be considered for even that hybrid SBA loan. In other parts, $500,000 to be considered for a certain allotted amount of funding. So if you're somebody who's coming into this saying I do $50,000 in my lowest month, and you're only depositing a check or an ACH deposit of $50,000, or you're directly pushing into cash like that, that's not going to be enough. Too much risk. What if your one client or customer doesn't pay you anymore? You may have enough time with them. You may get another customer who brings you in $50,000. Great. Now compile those 2, compile those 3, those 4, those 5, but don't just bank on one primary customer just giving you and you depositing in one $50,000 and we're going to call it good. That's not how it works. Especially some industries are more higher risk. And there's a lot more, guys. Like, I can get so deep into just what I just said. Like, every one of these little segments that I've already touched upon, I can even dig deep, like even deeper than what I've done. Like, I can get so far, but I'm not going to do that because we're segmenting into different topics. And this is stuff that I can communicate with you. But just understand that I can go so much deeper in understanding all of this before you even go and apply. Like, you have to know this stuff very, very well. I was about to burp there. Excuse me, there. Now, that's because I have some water, I don't know, dairy products. It does that. So 3+ deposits consistently per monthly basis. Some would look at 5, if not 5 to 7, 7 and above. So it's based on cash flow, not collateral. It's super fast funding, even the same day, and is open to poor credit scores. And most of the time, don't report to the credit bureau, especially business credit, depending on the program, since we're just dealing with personal credit scores. They come with personal guarantees, as like most 99.99% of the loans out there do. There are no PG loans sometimes, but those are very hard to get, and you just have to demonstrate a lot of that you've been a part of programs and you're doing all this. So I have a hybrid cash advance or merchant cash advance, call it what you may be, that is generally 50% less expensive than a lot of these term loan options, even 1 to 2 year term loans. And a lot of these unsecured longer term loans, SBA financing, and so forth, when it comes towards the interest. So plus, we don't take a future percentage of your credit card and even debit card sales, so you don't have to worry about getting taken out more if you make more sales one day and less in one day. So it is part of like the whole credit card processing, is your business taking on credit. And so we'll look at that, and it won't fluctuate on what you're making in repayment, because we're not taking a future percentage of your future credit and even debit card receivables. So it's like a purchase agreement that you say, hey, and these are my projections. This is what I'm doing now. And this is what I would see to be doing in the future. But we're not taking that with this hybrid. So it's a great addition. So this will be a great fit for expansion, even COVID relief, working capital. You can use it however you please. In some instances, you can't just use it extremely for purchasing an existing business. And there's some lenders that do. So I'll leave you more information on that down below. So if you're cash flow positive, the better. Otherwise, it could be a line of credit. Line of credits, they'll look at it as well, but it could be more credit based and for more cash flow concerns. So we can offer here 4 to 24 months in term length, which gives you more than enough time to pay it back, and will be stress-free from the additional interest over time with much longer terms that you may or may not qualify for. But for qualifications, this is a big one. And I did a video, I think it was yesterday, where I spoke about the banking activity as well as the bank statement. So make sure you look at that video. It'll have everything you need in it. Do you have a business checking account? Must be in the name of your business, not a personal account used for business, unless you're a 1099 gig worker, self-employed. Then you can use personal for business, but you'll be capped at about $5,000. So online banking is set up. You're not transferring funds from multiple bank accounts and not going from personal to business checking, because this does not count as shoe deposits or organic deposits, that being ACH, checks, cash, etc. No more than 5 non-sufficient funds. Very common, especially with the SBA 7A loans. Let me move this over. Non-sufficient funds. If you're running into these issues, you already have debt you're taking on top, negative days, average daily balances, your profit, all of this considered, it won't help at all. You won't get qualified for it. So no more than 5 non-sufficient funds with the specific one, that meaning overdrafts, bounce checks, negative days in the account. What is your average daily bank balance? Are you negative? So negative days in any of the last 3 months. So, or that. So are you doing, and there's a certain amount you could be doing, is it 3,000, 5,000, 15, 20, 30,000? Depends on what you qualify for. So we're going to go over that. Current loan consideration. If you have a current capital advance, the amount you still owe will be taken into consideration and cause a reduction in your approval amount. More funds, second to fourth positions can be available. If you have an existing cash advance, which you may or may not, or a business loan, it will cause a reduction in what you get. And if you had more positions, you may not get anything at all. So this goes the same with all business loans as well as cash advances. But if it's an EIDL loan, then it's another SBA government-backed loan, like an SBA 7A loan, then it may not be directly correlated because they're a bit different in how they operate. COVID relief funding could be COVID relief funding, but it's primarily working capital funding and what you need for business growth and expansion, as well as business expenses on that end. So they may not be directly correlated, so we won't look at that as somewhat of a position. So, but when you're talking about like a cash advance with another cash advance, then that's a position. And I spoke to an individual today who told me about, I'm not going to say the lenders that they went through to get funding, but they told me how much they have on them, what were their terms, what were their repayments, or in other words, I can find out what their interest was on top of what they gave me on repayment, which I already did myself without asking. And so when I found that out and how much time they've been already paying it, I've had people come to me that they want to consolidate their loans. They want to cash out their loans. And specifically, if it's a cash out refinance situation, then if you don't have it all together, it will not work for you. So we can look at that. It'll be looked at on assets, real estate property, the equity, and all of this to be considered. I'm just moving around a little bit because I've been on here for about an hour and 10 minutes. So it's not like I'm just fidgeting because, when people fidget and they say something and it just doesn't make sense or it's like they're lying. I'm not doing that. I'm doing it because I've been sitting for about an hour and 10 minutes now that I realized that. But I'm going to conclude here in just a moment, so please stick with me. Now back to this share screen. That's how we look at it. Also, not have issues with financial fraud, past default, and past default judgment in place. Submitted altered bank statements to another lender. Don't do any of that. Just to make it look clean, don't do that. Because you said, well, I have had my starting bank balance was 10,000, but you altered it to say it's 30,000, and your ending bank balance is some obtuse number of about 150,000, but before it was 20,000, and we're trying to figure out. Like, I see these things right away and I go, come on, Jerry, come on, Sally. And then I go back to Jerry or Sally, because I fix names. And I go, did you know this? I don't know what you're talking about. That wasn't me. They just don't want to be found out. And I get that. But be truthful with what you're doing and how you're coming to the table with your information. So no financial fraud, past default and past default judgment in place. If you get defaults and any cash advances, business loans in particular as well, then it just means you really won't get any funding now or anytime in the future, no matter if it was 3 years ago, 4 years ago, a month ago that you defaulted. It's just it doesn't look good. You can't repay the loan. There's a lot of issues happening. You had to declare bankruptcy. You ended up in collections. No, there's just way too much concern. And if there is a lender out there, there may be one. I won't get into the specifics. They'll say, hey, I'll forgive this. And then we'll move on and say, hey, but I'm going to give you just this limited amount. You have to pay it back in 3 months or so. Prove to me that you can with this higher interest. And we'll then talk about getting you better funding, more fundability details and revenue and sorts of terms and rates, etc. So back on to this. So how does it work? So with these types, we can get you between 75% to 200% if you're doing above 15,000. Some cases it has to be 20,000 or 30,000, but 15,000 here. And so there's a little bit of an example there that I kind of give you guys when you guys go through these questionnaire forms. And what I say here is if you don't get everything you want all in one shot, what I tell you is don't worry about it. What I tell business owners is to take what they can get, and in about 45 to 65 days, you do 55% of it, it's paid off. We can look at refinancing it, giving you more add-on funds, getting you more funding available. Maybe not be the full amount that you got initially or more than that if you just paid off over 50% of it, but we can get you maybe half. We can get you more of it. And if you pay off the full amount, we can then say, hey, we're going to get you what you got before, or we're going to give you more. And we're going to increase the terms. We're probably going to decrease the rates, if anything. Wherever you are, everybody's different. So the only case, and this is what a lot of people do, like if they can't get financing of everything that they want all in one shot, this is what you do. You take what you can get, come back and get more. Don't add on more cash advances just because you want more funding. Don't do that. What I say is just take on one position and go with it, run with it. A lot of people, they take one and then they go get approved for another one, or it's just so new that they don't get approved for more. They come to find out that they're ineligible. Be careful about taking more than one cash advance. What I recommend you do is take one only. Just because you need more funding does not necessarily mean that you should go and apply and get more funding. Stick with one, build the relationship. Don't be bouncing. You bounce up too much. What ends up happening is you don't build enough of a relationship with myself, because with me, you get behind the scenes stuff. Me, I communicate with my underwriters. I have a personal and business relationship with them, as well as the lenders. So I know very carefully what their expectations are. They come back to me and say, hey, Michael, I have Miguel here who has received funding with so-and-so, and now they're looking to get funding here. They've paid off over 50% of it. Now they've paid off all of it. Good. Now they're trying to transition here. Here's their situation. What happened over there? Okay. Now we're starting from complete scratch again. They're starting fresh. So that may be looked on better as opposed to taking on multiple positions. Multiple positions means you have current advances or business loans. So you have one with this company, you want another one, another second position, third position, fourth position. So over here, so you can get 4 to 24 months, sometimes 3 to 18 months. So 2 to plus years in financing can be a lot more if you're looking for 2+ years in longer terms if you qualify for those. And I said a little bit about the rates here, what we'd be looking at. So for an example, if it was between 1.19 to 1.49, your advanced amount, so you get 40,000 to start, and then your payback would be between 47,600 to 59,600, and that's just the range. That's not what you've been given. So given the funding details you may have supplied to me, I will give you a ballpark of what the underwriting would look like in your certain situation. So everybody's different. So you may have A paper lending, B paper lending, depending on rates and terms. So you may get rates between 1.19 to about 1.30, or you may be between 1.31 to about 1.49, or 1.19 to 1.69 if you're a higher risk, lower revenue, lower credit, etc. You may be giving on a higher risk. And that's just simply what we take is, hey, if you were given, for this example, you were, let's say, I'm going to write it down right here. Or actually, let's put it down here on the document. Looking through your fundability details, and I have other videos where I give you examples, but I won't do that in this one. So let's say you were given on 1.38 of a total payback. And we're going to multiply that number by the amount of financing you received. So for this example, let's say you got 40,000 in finance. Well, let's stick to the topic here at 100,000. And so basically what you're paying back, if you want to look at it as interest, we do 38% in interest is what you're going to be paying back. And a lot of these loans, or what they're called cash advances, is, oh, you guys can't see that on screen. I'll get to that in a moment. Is they're going to be giving you in like 20 to 50% interest, or if not 50%, 50% to about 200%. It's not about the interest. A lot of the times what it is about your repayment. So you're saying, well, somebody who has a 7% interest rates with an SBA 7A loan or this product is not far better off than somebody who's getting a 30% interest. Right and wrong. So it depends on everybody's situation. What I'm saying is, if you're getting on 38% interest or 1.38 total payback, what you have to primarily look at is your repayment. So if you're paying back $138,000 on $100,000 funding that you're getting, or it might be $146,000 to be honest, because with broker fees and a little bit included, so you may be paying a little additional amount. So, and you're getting it over the course of 9 months, let's say. So if I took, let's say, $146,000 and I divided that by the 9-month term that you got, and this is given to you by our underwriting guidelines that I know very well. So $146,000 divided by the 9 months. We're going to round that off to $16,222 is what you're paying towards all of that. And generally speaking, in repayments, we can lend you between the 16% to 18%. So you fall within that range of what you can afford to pay back. So we always know your affordability. We don't just give you something and then say, hey, you can't afford it. There you go. No. So for that example, a 1.38, and let's see here. You guys can see that now. So 100,000 on 138 or 1.38. You're going to be giving back 338,000 to pay back, plus an additional amount that then evolves into 146,000 with an extra like broker stuff, lending stuff on our end. So it may be 146,000. You may take it off a little bit with the origination, and so instead of 100,000, you were given 98,000 on that and expected to pay back that amount, more or less. So over the 9 months. Then we would have divided that, and we got that $16,222 rounded off about, and that's what would be considered in how amount you can repay back in your affordability. And then we can break it down even more thoroughly and say, hey, daily, what are you paying back? So if I get this number down here. I'm calculating right now. 1 second. So if we looked at it from this point of view, and we said you had to pay back $146,000 and you were given 9 months to pay it back. So what I did here is I did some quick numbers. I multiplied it by the amount of days you would be given in a month. Some lenders will vary. They'll give you 21 days in a month, 20 days. But I did it off 20 days here. So I did 20 by the, here, let me do it this way instead. So the 20 by the 9 months that you were given, it's 180 days that you're going to be paying off this, not weekends included. Not, I said, like you don't have to pay on the weekends. Unless you want, no, I'm kidding. Unless you want to, no. You don't have to pay on those weekends for the most part. So 180 days accumulated, and then the 146,000 divided by the 180 days, then you're looking at about $811 daily payment or so. So that's what you have to keep in mind. And here, let me do it this way. Yeah. 111 by 5 days in your week. That's 400,555. Which is your 16,220 you're paying per month. So those are the exact numbers that it comes up to. Okay. So I just did all the numbers here, and we talked about the 16,222 and what you're paying within those months. Can you afford to pay that? That's what you have to look at. Can you pay off 10,000, 8,000, 6,000, however much it is per month, and run it back and say, if I'm paying back 10,000, what does it look like on a biweekly, weekly, daily schedule? I have to know that. I know it because I've been through it myself. And I put myself in situations where it was strainful because I took a traditional merchant cash advance and I was like, well, now I'm paying back this amount because I made these sales with my online business and now I have to pay back that amount. No, well, let's do it this way instead. I should have taken this amount. Now, that'll conclude everything in the, oh wait, I think I have one more thing I want to go through. Yes, I do. So there is that MCA. There's also the business term loan option. I'm looking at this on my screen, not the one you see right now to the right. Let me move this over and we'll close up shop. So we also have a business term loan between 1 to 2 years for unsecured. With secured, you possibly get 2 to 10 years if you're offering that up with collateral, mostly accounts receivables in a lot of cases. And we can refinance up to 2 merchant cash advances. So qualifications, 2 years time in business, 25,000 deposited monthly in business bank account, or 300,000 in annual sales. So similarly to like an HBA, so there's that HBA again, the hybrid SBA loan. So that's what you're looking at it. 660 plus FICO, not 680 and above. Usually it's the market. No bankruptcies, liens, foreclosures in the last 3 years. And we can look at getting you a 1 to 2 year term loan if you qualify for that. And a lot of you will, a lot of you won't. So again, 25,000 deposited in monthly in business bank account, or 300,000 in annual sales. And best that you disperse that 25,000. If you have 50,000, better disperse more into that account over time and consistently, no fluctuations, because that can also disqualify you. And in business bank account, or 300,000 in annual sales, and a 660 FICO. And we can look at all that. And just so you know, these are monthly payments, as I said, no prepayment penalty if you decide you pay it off much sooner. And you're looking at about 1 to 3% in interest per month. So here's a quick one. And I had to put in my calculator over here, but if you're looking at, we have to assess your risk. If you got 1 to 2 years in a term loan, unsecured term loan, I'm not sure why the sliding is the way it is. Let's do it this way. It's also because there's not enough light coming in. Let me move this. Yeah, I think that's better. So aside from a cash advance, where you can get between, that's more generally speaking, 3 to 11, or if not 4 to 11 months is the cash advance range in a lot of cases. But when you get into these term loans of a year to 2 years, what it's being calculated on is it's quote unquote more of a hard money loan, if you want to call it that. But a lot of people put a wrong connotation on it. Again, it's perspective on each individual. So if you're given 1 to 3% interest over 1 to 2 years, you guys can already do the numbers there. Let's say you were given a middle of 2%. So 2 by 24 at the most, that's 48% interest. So you're paying 48% interest over 2 years, and it may be slightly higher at 3%, and it could be a little bit more. But it's also assessing the risk. So 48% you're paying on this 2 year term loan over here, And if we go back to the example where I said you're paying back $146,000, $16,000 on a monthly basis or so for those 9 or so months, or even if you were given a year. So 48% interest over 2 years sounds good when you're given more terms, but it's not when you're looking at your overall interest, your total cost of financing. And you may not even qualify for that. But over here, instead of going for a 1 to 2 year, and it depends if you qualify. You have to qualify. It's not like, well, I get flexibility. No, you have to have the qualifications. So as opposed to over here, you were paying, well, for 9 months, yeah, you're probably paying a little bit more, but you're paying more towards the principal and you're paying it off much faster. As opposed to over here at 48% interest, over here you were given about 38% interest. So guess which one is saving you more in the long run? Yeah, that's the short-term cash advance. So a lot of you guys are like, well, I don't want these cash advances. I don't want these higher rates. Well, what do you bring to the table? Do you have accounts receivables, collateral? What are you putting forth to me to say, Jerry, when I put my hand over your shoulder, you do qualify for an SBA 7A loan? Or listen, I know you wanted this, but you don't have the tax return to 2021, 2022, however we look at it. We need that. Well, what if I filed it? Okay, but what about your excessive business debt? What about all of these inquiries you've developed over this time? Credit utilization, debt to income. So factoring all that and everything being said and done, your repayment is what should matter most as opposed to the interest and the terms. Those are just part of it. What should matter most to you is, what am I repaying back? So what if it's not 5 years? I wanted to go from 1 year to 5 years. That just won't work. I spoke to an individual today. Maybe you're in here watching. I won't say a name. But you're trying to go from 1 year to 5 years without doing a cash out refinance, where at most we can get you up to 2 years in that circumstance. And you wanted more funding. You wanted an extra $250,000 to do these services. And you already have a couple of positions. You haven't paid off a lot of it on this one. This one you're almost done with. They won't even get you close enough to what you were given on your last one. So we're going to get you a reduction. So when we combine all those loans together, you might be getting $120,000 altogether, but you need the $250K. It's just not going to happen. So it's not always going to work that way. So I'm going to leave this open for about another minute or two if anybody has any questions, comments, or concerns, or I will close, and then I will close up. In the meantime, I got a text message. Spam. Spam again. This guy's doing it all wrong. And I'm speaking about a broker. Like, I also train people because of the reputation that I've built. I wouldn't have done it without that. People would come to me too, trying to, like, they want to get into the field. They want to understand, like, and I'll go into this. There are people who want to do real estate. They want to be real estate agents. People who don't. They want to have a different kind of control. They don't want to be in the sales per se. What I do is in sales. It's, yeah, you can say there's sales involved. There's always anything you're doing, you're selling yourself. But what I'm doing is I'm giving you information, informational value, educational content. I don't pressure you. I don't ever take you into that environment. I do any of that. I just show you, hey, this is what you can demonstrate a use for, and let me show you what your options are. I'll give you information on them, some ballpark numbers. And I'm not selling to you in the sense that, hey, come get this funding now, or you're going to a car dealership, and they're not as much about this as they used to be. But I'm not doing that. I'm taking time to really understand you as a human, and then say, hey, these are the details you've brought to me. Let me get a little bit of time to put something together for you, a package, what your best funding option and options are. And then we can communicate this. Once you have it on hand, then if a phone call is best, we can do that. At least you have everything on file, and you go, hey, I looked it over, Michael, and this looks attractive to me, and I didn't know this. If I wouldn't have talked to you, then I wouldn't have understood how this SBA 7A loan option works. How does this microloan work? How does this unsecured term loan, secured term loan, lines of credits, of all kinds, and personal slash startup loans, equipment, etc. work. But because you took the time to go through it, you better understand that. So just understand that there are different places you can go into. And if you're looking for a new way to start maybe a new career or do something different from home that gives you more flexibility to then say, hey, I don't want to miss my kids' soccer games. I don't want to be that parent who's asking Jerry how the game went and then just checking in time to time. You're working, but too much of it is in your office, or you just can't spend enough time around your family. You don't want to miss appointments, do you? You don't want to miss what your kids are doing daily, how they're growing up, who they're interacting with, because you were there. You took them to their soccer game. You took them to the basketball game. You showed up there late in the evening or in the morning. You took a little bit of day in the afternoon to go to their event, and you showed up with or you still see all the other parents not there because they're having to work hard. So you have to think about what you want for yourself in your own future. And that's all I'm going to leave it with. I don't want to go too far in depth, but if you guys have any questions, comments, or concerns, please feel free to voice them to me down below in the description. For anything else, the questionnaire form down below, make sure to check that out. That'll be the fastest way to get a hold of me. If you like this video, please give it a thumbs up. If you feel somebody else will get value out of it, like a complete stranger, it could be a friend or a family member, someone you know who needs education on this, like no other. And I'm saying that, not saying it just to say it. Too many says. But I truly back that up with my reputation and the fact that I know that you guys do not get enough of this online, not even reading it on a blog post. Sure, there are some things that I said, but there's more that I go into that you guys would have never known without tuning in. So that is everything from myself. Thank you all for tuning in. Talk to you all soon.